Imagine you are sitting in your home office, sipping lukewarm coffee, when a Zoom invite pops up from the CFO. You join the call, and there he is. Tired eyes, that specific tie he wears on Tuesdays, the slight lag in his audio. He tells you the merger is happening early, and he needs an immediate, confidential transfer to a holding account to secure the deal. You hesitate for a microsecond, but his voice is perfect, his frustration is palpable, and you don't want to be the bottleneck. But here's what happened. You didn't speak to your boss. You spoke to a neural network. That transfer just evaporated into the blockchain, and you just became the patient zero of a $25 million heist. Welcome to the new era of financial warfare. Today we're going to dissect the economics of manufactured reality, looking at how generative AI has moved from making funny celebrity memes to becoming a global financial risk that is literally too expensive to ignore. If fraud were a publicly traded company, you would want to buy calls on it immediately. We aren't looking at a niche technology anymore. We are looking at an industrial revolution in deception. The deepfake AI market itself is poised for explosive growth, moving from a modest $564 million in 2024 to a staggering $5.13 billion by 2030. That is not just steady adoption. That represents a compound annual growth rate of roughly 44.5%. To put that into perspective, that is faster than the growth of most legitimate tech sectors during the dot-com boom. Investors love a line that goes up and to the right, provided it isn't measuring the collapse of social trust. This $5.13 billion industry isn't just selling movie effects. It's effectively selling the tools to rewrite history in real time. As the barrier to entry lowers, the sophistication of the output skyrockets. We are building a multi-billion-dollar infrastructure designed specifically to blur the line between evidence and fabrication. It is the only industry where the product gets cheaper to make while the cost to the consumer, that's you, gets infinitely higher. So while tech evangelists celebrate the innovation, risk managers are looking at that 44.5% CAGR and sweating through their suits. Let's move from the market cap of the tools to the market cap of the crimes. You might think you are savvy enough to spot a fake, but the data suggests we are all collectively losing this battle. According to a study by Pindrop, deepfake AI-led fraud cases didn't just double or triple, they surged by 300% year over year. That is the kind of return on investment that cartel bosses dream about. It gets even darker when you look at the broader timeline of attack vectors. Deepfakes are now responsible for 6.5% of all fraud attacks recorded. That might sound like a small slice of the pie, but it represents a terrifying 137% increase from 2022. We went from "Is that video real? Ho!" to "Is anything real? Ho!" in roughly 24 months. This isn't a gradual slope. It is a vertical wall of criminal activity. Traditional fraud prevention is looking at biometric verification and realizing it might be obsolete. When a 300% spike hits an ecosystem, it breaks the levees. The banks are scrambling, but the algorithms are faster. Remember the days when phishing emails were written in broken English by a prince promising you gold bullion? Those were the good old days. Now the AI reads your LinkedIn, mimics your writing style, and clones your boss's voice. We have observed a 202% increase in phishing email messages, and they aren't just spraying and praying anymore. They are precision-guided munitions aimed at your credentials. Consequently, credentialed phishing attacks saw a massive 703% increase during the same period in 2024. That is a seven-fold increase in attempts to steal the keys to the castle. Why break down the firewall when you can just politely ask an employee for the password using a deepfake avatar of the IT director? This 703% jump proves that the human element remains the weakest link in the cybersecurity chain. The AI doesn't need to hack the code. It just needs to hack your brain. It exploits urgency, authority, and fear with mathematical precision. We are drowning in a sea of synthetic communications. If there is one place where the Wild West meets high-tech grift, it is the cryptocurrency markets. Crypto has always been volatile, but deepfakes have turned it into a slaughterhouse for the unverified. A recent CNN report dropped a bombshell. Around 40% of high-value crypto scams in 2024 involved deepfakes. That is nearly half of the big scores relying on synthetic media. We aren't talking about petty theft. We are talking about ecosystem-draining events. Think about the implications of 40% of major fraud relying on this one specific technology. It means that video verification, the gold standard of know your customer protocols, is effectively dead. Scammers are using deepfakes to bypass exchange security or to impersonate celebrity endorsers to pump tokens. If you see Elon Musk telling you to send Bitcoin to a wallet, there is a statistical probability approaching certainty that it's a deepfake. The decentralization of finance was supposed to free us, but the democratization of AI is just costing us. When 40% of the game is rigged by AI, the house doesn't just win. The house isn't even real. Let's revisit that opening scenario because it actually happened, and the price tag was astronomical. A multinational firm's Hong Kong branch lost $25 million because an employee was tricked by a deep-fake video conference call. Everyone on the call except the victim was a deep-fake recreation. This wasn't a glitch. It was a highly choreographed digital stage play that netted $25 million in a single afternoon. This is the new benchmark for corporate risk. Deloitte is now predicting that generative AI could drive U.S. fraud losses from $12.3 billion in 2023 to $40 billion by 2027. That is a 32% annual growth rate in pure loss. We are looking at a future where a $40 billion hole in the U.S. economy is just the cost of doing business. Corporations are going to have to spend fortunes not just on security software, but on retraining human beings to trust nothing. If a $25 million transfer can be authorized based on a video call, then video calls are no longer a valid form of verification. The boardroom is now a crime scene. Now, zoom out to the global stage, because the numbers get so big they stop feeling real, which is ironic, given the topic. The generative AI market is projected to grow 560% between 2025 and 2031, reaching a massive $442 billion. That is a massive economy of content creation, but it brings a massive shadow economy of fraud along with it. In 2024 alone, the expected global cost of deepfake fraud is estimated at $1 trillion. Yes, trillion with a T. That is roughly the GDP of the Netherlands or Saudi Arabia, simply deleted from the global economy by synthetic fraud. This $1 trillion drag isn't just money stolen. It's the cost of remediation, legal battles, insurance hikes, and reputation management. When you have a sector growing 560% that enables this level of financial destruction, you have a systemic risk. We are effectively printing fake reality and paying for it with real currency. The global economy is fragile enough without a trillion-dollar parasite latching onto the banking system. It creates an inflationary pressure on trust. The rarer the truth is, the more expensive it becomes to verify it. Here is where the financial historian in me gets truly pessimistic. We have discussed fraud and theft, but the ultimate cost is geopolitical stability. With the cost of fraud hitting $1 trillion and attack vectors up to 137%, nation-states are taking notes. Why spend billions on missiles when you can crash a rival stock market with a deepfake of their president declaring war? The tools that stole $25 million from a Hong Kong firm are the same tools that can fabricate a diplomatic crisis. We are entering an era of the liar's dividend, where bad actors can claim real evidence is fake and fake evidence is real. The markets hate uncertainty, and deepfakes are the manufacturers of uncertainty. If you can't trust the video of the Federal Reserve Chairman, you can't price the bond market. If you can't verify the CEO's earnings call, you can't value the equity. The geopolitical cost isn't just in dollars. It is in the collapse of the consensus reality that keeps the global peace. We are moving from the information age to the disinformation age, and the tuition is going to be expensive. So we have a market growing at 44.5%. Fraud spikes over 1,000%. And a global price tag hitting $1 trillion this year alone. The technology is neutral, but human greed is not. We are building a world where your eyes and ears are liars, and your wallet is the victim.